I'm Brad Rosley. Thanks for tuning in again today to Smart Money. Today I'm going to be focusing on a topic that's near and dear to my heart because it saved my family a ton of money over the last 10 years. We're going to be talking about high-deductible health plans. The acronym is very popular, Hdhp, high-deductible health plans. Years ago, my family had a low-deductible health insurance plan with Blue Cross Blue Shield of Illinois. I have a family of 5 with 3 kids and a wife. Our family has been relatively healthy, but we've had some ups and downs, whether it be a broken arm or the chicken pox, things like that over the years. Well, health insurance premiums for most Americans have gone through the roof. If that hasn't happened to you, you have most likely a wonderful employer plan, and they're picking up a good percentage of the actual premium. With the Blue Cross plan that I had for many years, it was a PPO plan. I still have a PPO plan, but the deductible was quite low, around $500 to be specific, and then I went to $1,000. But then came along the idea of going to a truly high deductible health plan. High deductible for me was $10,000. Yes, that's right. My deductible on my health insurance plan is $10,000. Why'd I do that? Well, it's really simple. The idea behind a high deductible health plan is there's a trade-off between having a low deductible and high premiums or a high deductible and low premiums. It's really that simple. And the problem is when you pay for the low deductible, you pay a lot of money in premiums. And if you don't use your health plan very often, the insurance company doesn't give you any of your money back. You're stuck with whatever you paid in premiums. When the reality is, yes, we'll have some issues along the way during the year and have some medical costs. It's nowhere near as much as the premium that we're paying. So in my family's example, we went from a $1,200 a month premium with the $500 deductible to a $500 a month premium with a $10,000 deductible. Think about that for a minute. We save $700 a month. But you're saying, I can't afford to do that because I can't afford to have a $10,000 expense hit me. It would wipe me out. I get that. But here's what you do. You take the premium savings, whether it's $200 a month or $700 like it was in my case, and you bank that. You put it away just in case you need it for a medical cost. And here's the great news. Whatever your premium saving is, whether it's $200 a month or more, you take that premium savings and think about this. If you have less than that amount of insurance claims in the year, you come out ahead. So if your premium savings is $300 a month going from a low deductible to a high deductible plan, every month you don't have $300 in claims, you come out ahead. Now, certainly along the way, most of us are likely to have a claim within our family at some point. But if you've saved that money along the way, you have it and then some to pay for it. Does that make sense? This is how high deductible insurance premiums work. Well, technically a high deductible insurance plan for the year 2020 has an individual deductible of at least $1,400 and a family deductible of at least $2,800. So that's what qualifies for a high deductible plan. They also have, if you're interested in taking that premium savings or other money and socking it away into a health savings account, which I've done a couple of videos on. Health savings accounts are one of my favorite places to put money. You can put money into those health savings account rather than just your personal normal bank account, and you get a tax deduction for doing that. For an individual in 2020, you can put up to $3,550 into that plan. And for a family, it's $7,100 a year. That's up $100. If you're over age 55, you can put another $1,000 into the plan. So that's where I would put my premium savings because I get a tax deduction on top of the premium savings into my own family net worth account because it's whatever you use is yours to keep. You don't lose it if you don't spend it. So it rolls over every year. So that balance can be increasing over time such that you could easily have enough money in that account to pay for any major financial medically related expense you might have. So these high deductible plans are really perfect for a couple of situations. One, for younger people. Two, for people that have extremely healthy families. And three, for people that have the means to put money into the health savings account. So if you fall under any of those categories, these plans are ideal. Well, where do you get a high deductible plan? How do you get a quote? Well, you can go to the exchange, the government exchange program at healthcare.gov, or you can go to a place like ehealthinsurance.com, and they'll search many companies for you based on your parameters that you put in. All these plans, by the way, you can still use a PPO doctor network. Keep that in mind too, so you don't lose that. And make sure you check your network to make sure they have good doctors and hospitals in your plan. So the way that would work is, oftentimes when you go and visit the doctor, usually instead of paying a copay, you wait until you get your bill in the mail that shows your preferred provider or PPO doctor network discount, and you get the bill. And you have to pay the bill out of pocket, oftentimes, where in the past your insurance may have covered it. So keep that in mind. Now, hopefully and ideally, the premium savings you had from making the move from the low deductible plan to the high deductible plan is more than your annual cost of medical related bills. That's how we decided if this was a good move for you or not. Also keep in mind that HSA is available. And if you do have the HSA, they have maximums as well. The maximum out of pocket you can have on a high deductible health plan for an HSA is $6,900 for an individual, or $13,800 for a family. 100% of your expenses after that maximum out of pocket, if it were to be reached, 100% of your coverages are paid for by the insurance plan in that situation. So you know your worst case scenario. A high deductible health plan really works like true insurance. Most medical insurance is not insurance at all, by the way. Insurance, by definition, is supposed to cover you in case of something that's a large ticket item, that is unpredictable and unlikely. Well, that's not what a doctor checkup is for. That's why medical insurance is so expensive, because it's paying for those type of things. So I would structure your insurance to pay for those things that are very expensive, very unlikely, and unpredictable. So thanks a lot for tuning in again today. You can see more of my blog posts at bradrosley.com and visit my channel. I hope you consider subscribing, as well as giving me a like. Or if you have comments or feedback, I'm really good about getting back to your questions. So feel free to give me a question if you have anything at all. Thanks a lot for listening. Have a great day.